Hello, everyone. This is Mary Charlotte Grayson, Director of Events for the National Indian Gaming Association. Thank you so much for joining us today for our exciting and informative webcast series, Tribal Gaming and the New Normal, with hosts Victor Rocha and Jason Giles. Today's discussion will focus on doing business during a pandemic. Before we introduce the presenters, I would like to go over some housekeeping items to keep in mind. All audience members are on listen-only mode, which means you are muted. We will be monitoring audience engagement on the dashboard and do encourage you to participate by using the question panel. There will be time for questions at the end of the presentation. We are recording this webinar and you will receive an email with a copy of the recording so that you may listen and refer back to it any time. This webinar, as well as others in our series, will also be made available on our website at indiangamingtradeshow.com under the Education tab in the coming week. Now, without further delay, let me introduce Victor, our conference chairman with the National Indian Gaming Association and editor of Pechanga.net. Victor, take it away.
Good afternoon, everyone. My name is Victor Rocha. My co-host is Jason Giles, Executive Director of the National Gaming Association, and this is a new normal. Welcome. In today's conversation, we're talking to our friends Kristi Jackson of TFA Capital Partners and Todd Eilers of Eilers Krejcik Gaming. Welcome, gang. How you doing?
Morning. Thanks for having me.
Good morning, Todd.
Doing well.
Hey.
Thanks for hosting.
And Todd, thank you so much for coming. Jason, how you doing, buddy?
Good. We're hanging in there. Maryland and DC are getting ready to go to phase 3, so I don't know what that means, but
yeah, you know what? It kind of reminds me of during 9/11. Remember they had like code orange and code red and stuff like that. And you know, I wish they'd have something as uniform like that, because I know in California they say San Diego is getting out of code level 1 or into level 2, and there's level 1, so it's all just all over the place and stuff like that. There's no real uniformity to no place I can really rest my anxiety. It's all over the place, you know. You know, last week, Jason, as you remember, you know, our guest talked about the pandemic, how the pandemic has changed entertainment and conferences. And, you know, and that's kind of the same thing, Kristi and Todd, you know, I'd like to ask you the same question, you know, as we know, and as we've been doing the pandemic, you know, this is, we're now into, gosh, what is this, guys, like the 6th month of this, something like that? Yeah,
like
and, go ahead.
I was going to say it feels a lot longer, but yeah, I think you're right.
It's been crazy. And, you know, so, and part of this webcast is, you know, the idea behind it is to have these honest conversation about what's happening in the industry, especially from our perspective, from the tribal gaming perspective. And Todd, let me start with you. First of all, welcome for being on the show, and welcome on the show. And could you tell our guests a little bit about yourself and what you do, my friend?
Sure.
I know. Jason doesn't know, so you know, I want Jason to know. Yeah.
All right, here we go. So first of all, thanks for hosting and having me. Really appreciate it. Big fan of, and really appreciate what you're doing with the series here. So I'm a majority owner in a market research and consulting firm focused on the gaming technology, gaming equipment and technology sector, primarily within the larger global gaming industry. So we're focused on, you know, the B2B market, the suppliers. We're focused on social mobile gaming. We're focused on online gaming, sports betting, but always with a angle from the supplier and technology viewpoint. So that's kind of what differentiates our firm. Like I said, we do a lot of market research reports. We do a lot of consulting work, and it's all focused in those areas. We started in 2012. My background, I was an equity research analyst at an investment bank for about 10 years prior to starting my own firm. And while I was there, was following the gaming equipment sector. And so, you know, I've been kind of observing the industry from that point of view for almost about 20 years. And we've got roughly 15 employees right now, and headquartered in Irvine, California. And yeah, that's I think, a good overview of the firm and kind of where I'm from.
Do you gamble, Todd?
I'm not a big gambler. I will. I like to play blackjack. Usually that's kind of my game. And if I'm with a group of friends, maybe some craps, I might throw that in there. I will occasionally walk the slot floor, since the bulk of the work I do is in the slot machine arena. So I will walk the floor and I like to just look and see what new games are there, and occasionally I'll sit down and play some of the more popular games as well.
Well, the reason why I ask is that it seems like most of the people in our industry don't gamble. I mean, there are some that do, and there's some really great gamblers, but it seems like a majority of the people don't really gamble. You know what I mean? We don't get high on our own supply, I guess you could say.
Yeah. Smart. Yeah.
I just thought that's the reason why. So Todd, in the 20 years you've been doing this, tell me about what your, how has things changed? Well, how has the world changed for you?
With respect to the kind of the COVID and
yes, sir. Yeah, in the industry. Yes.
So from a personal level, from our organization, we were lucky somewhat, I guess I should say, in that the bulk of our employees already worked remotely, and so we were kind of already used to that sort of virtual environment. So the transition for our organization was not that dramatic. I think we were lucky in that respect. Looking outside at the industry and just looking at it from a supplier's point of view, obviously it's not great. This is an extreme event, worse than even the Great Recession, kind of back in 08, 09 from a supplier point of view. I do think the worst is over, which was kind of that 2Q environment where, all casinos were shut down. And, as a supplier, a lot of the vendors were 100% exposed to the land-based industry, didn't have any, other business lines, no online gaming, no lottery operations. And so it was a really tough time. But I do think the worst is over. We are starting to see the industry slowly recover. From a slot sales standpoint, you're probably going to be down about 45 to 50% in 2020. So obviously not a great number there. But like I said, we are seeing signs of a recovery in the third quarter, and I think that will continue to gain some traction in 4Q. We do look for a rebound in next year. Probably wouldn't anticipate getting back to pre-COVID levels until 2022, but you should start to see a decent recovery in our view in 2021. Now that's just on the slot sales standpoint. I mean, the other aspect to the business for a lot of suppliers is the gaming operations or their leased and participation install base of games. That business, obviously, when casinos were shut down, there was zero revenue there. But once the casino market had started to reopen, it's pretty clear that business is going to hold up better than the game sales side. And so, that is, an area of kind of, I guess, something they can hold their hat on and kind of help to guide them through this challenging period, until we can kind of get to a little bit more of a normal environment next year and beyond. And so I'll just leave it at that. But, obviously it's a challenging year. I do think that the worst is behind us, and we are seeing a gradual recovery in the market.
How is the dynamics on the floor changed? I know empirically, when I go to Pechanga or some of the local casinos to see how things are going, it's interesting to see how people are adapting to the new poker games, the new table games with all the plexiglass and stuff. Like, has that affected sales at all, and slot machine sales? Has all that? What has the impact of COVID been?
Yeah, I think by and large, I think the reopening has been better than anticipated. If you go back to kind of late March, kind of April timeframe, I think by and large most casino operators, suppliers, industry observers were kind of preparing for a demand environment that was likely going to be cut in half, and so therefore a lot of companies took the tough steps to kind of cut costs. Unfortunately, there were some layoffs and furloughs, and but I do think the industry has reopened better than anticipated. And so, we talked to a lot of casino operators, and look, when casinos reopened, in many cases they were seeing pre-COVID levels, even on a reduction in the number of players or customers in their casino. So there was some pent-up demand. Also, the folks that initially came back were your core players, not kind of the casual player. So they were your core gamblers. There was some pent-up demand. And so from a top line, the reopening has been better than anticipated, which, with the cost cutting has really in the near term boosted profitability for a lot of casinos. Now, I think there's still a lot of uncertainty, still a lot of volatility to the market. And so I don't think you're going to see, operators, just pencil that in on a go forward basis and go back to buying slot machines on like a pre-COVID level, but it certainly is not a negative. And I think the more stability you get going forward, I think that casino operators become a little bit more comfortable starting to make investments again. And again, that kind of fuels our kind of view as we head into 2021, as we do anticipate a nice rebound off of a challenging 2020.
Are you seeing any movement to some of the new technology? It always felt that when arena gaming came out, and they put all those machines over there in the sands, and we'd all walk by them on the way to the conference in G2E and stuff like that. And it seems to me like arena gaming and electronic table games would be getting a second look again. Has that been the case?
Yeah, absolutely. There's a couple beneficiaries of kind of the changing dynamic with COVID and the shutdown and then the reopening with social distancing measures. On the land-based side, most certainly electronic table games or ETGs is a positive beneficiary. Obviously you remove chips, cards, dice, you remove touch points. In many cases, you even there's no dealer, right? And so there's a lot of advantages to that, but it also even goes beyond that. In many cases, like you mentioned, the stadium setup, there's a lot of flexibility in terms of how you can set up the terminals. And so you can space them out. And so, that is an area where we're hearing a lot of interest. It's a product category that's been out for a long time, frankly. We've gone through several generations of that technology. Even without this environment, it has gained traction in the market, and most casinos have at least one or more of those types of games. But certainly, it's gained some increased momentum in this current environment for sure.
Yeah, it really does seem like it's a no-brainer at this point, but it always reminds me of people were really pushing this technology, and there seemed to be some resistance, and we'll try it, but it seems now it's the perfect time for some of these new technologies to reach their potential and the promise that they've always had. And so I think that's great. Kristi, my friend, welcome. Good morning. How are you doing?
Good, thanks. Good morning.
Good. You have a little different perspective from our friend Todd. Can you introduce yourself to our viewers and give them a little information on your background, my friend?
Sure. Well, I guess Todd and I had a semi-similar background, and before I co-founded TFA about 11 years ago, I worked for B of A. I was there for about 15 years, and while I was there, was responsible for all the tribal gaming in the investment bank. So, saw tribes large and small across the country, and founded TFA kind of in the depth of the recession in 2009, and saw quite a change over, the first 10 years. And interestingly, some of the issues we've been dealing with over the past 6 months were not dissimilar to some of those that tribes found themselves in back in the recession, with tough lender conversations. Just about every single tribe had to deal with it that had debt, had some very difficult conversations going on with a bank or a group of banks. And we worked with a lot of tribes on those, got in the middle of a lot of forecasting conversations, from a period of closure, which nobody ever in their wildest dreams would have ever imagined we would have seen. We'd run downside scenarios for years, and it would be like, what if revenue was off 25%? Oh my God, how
Right.
could it be off 5%? Well, a new competitor opened down the road. No one thought it was zero. It just blew everybody's modeling to shreds, and you're starting over from a whole new base of analysis. But it's interesting, over the last handful of months, we've seen places reopen, and in many cases doing and reporting numbers that are record. On half the machines that they were operating before, highest revenues they've ever seen, which is astounding. So, now you're in another game. So now you're like, well, now what's my base, my run rate? What's my case that I'm going to be explaining to people for what this position is going to look like? And, it's kind of anybody's guess. We have our suspicions. I live in California, and there is nothing to do in the state of California. There's, really crummy restaurant alternatives where it's, outside dining in a parking lot. And no ways to spend entertainment dollars. And so I think to a large extent, the tribal casinos are a beneficiary of that. But it's really a market by market kind of analysis. So we're doing a lot of work, kind of getting in the weeds in a lot of places, thinking through trends, and trying to enable conversations then to a third party, largely lenders, related to how to deal with financing issues going forward using some of those trends and that analysis.
It seems like the new normal, and like you said, there was a lot of 2008 here, and one of the things that I've always said to people is that I felt that 2008 was one of those events that really forced the tribes to become business people and entrepreneurs. All the easy money was gone, and all of a sudden you really had to earn those dollars. You really had to earn those customers. And, in the long term, it was good for the tribes, although there was a lot of bad there. And I think here, maybe in the long term, we'll have the same thing. It'll force the tribes to really look at diversification. And although, when this pandemic shut down anything, what do you diversify to that's going to keep revenue flowing during the middle of the pandemic? So nobody could have predicted this. So we're still in unknown, in uncharted territory. So Kristi, what does this new normal look like now? You know what I mean? It's like, we have to reassess everything, and 2008 is just a marker, but this is completely different, right?
Yeah, no, it is. And I think tribes made the decisions that were right for them at the time, back in March and April. But when the shutdown happened, we saw extreme reactions, right, by tribal councils and then tribal gaming management teams, where some immediately said, whoa, let's furlough staff and let's kind of, minimize the expense, because we have zero revenue and every dollar we spend is just coming out of cash, or we have to borrow it. And we saw that reaction, which was, kind of quick and sharp, and in many cases similar to what the commercial operators were doing. To the other extreme, where there are many cases that you know of too, where tribes said, hey, this is like a family. This is part of our culture. These people have worked with us, even if they're not members of the tribe. They've become, part of our collective family, and we don't want to lay anybody off. So we're going to keep people on the payroll. And that was a very expensive decision that, many went in with their eyes wide open at what it could mean to their overall financial base. but others didn't, and they thought, for the first 2 weeks we're going to pay everybody and keep them on, and then, oh, this can't last much longer, let's just do 2 more weeks, and now we're a month into it, well, let's just do 2 more, and tens of millions of dollars are racking up in debt that they never had before. In some cases, tribes were borrowing down lines of credit for funding these operating expenses to keep this family intact. That was a very difficult period. But when you ask the question about what it looks like going forward, I think many will say that post this furlough period, post a layoff, you're kind of bringing people back. They're taking the opportunity to bring back the strongest performers and rationalize the overall staff so that maybe there's a more streamlined payroll, a more streamlined, operating metric that doesn't have quite as many employees and will hopefully for a longer period have a sustainable higher profitability, profit margins.
Well, and go ahead. Continue,
I was just
please.
going to say also, we talked to some of the commercial operators who almost say part of this is like the greatest thing that could happen in terms of all these negative drains on profitability, these amenities that were added over the past decade, whether it's spas or very high-end restaurants or lots of entertainment that in most cases will lose money to just bring customers in on the act itself, and they can't do them. They can't have valet. I mean, all of these things have been shut down, so it's boosting profitability. And a lot of people aren't complaining that as a business owner, they don't have those things in the mix. And so, what does it look like going forward? How many of these things will come back? I think there's going to be a more judicious decision process that the ownership takes relative to what marketing says they might need to start to roll out again.
Jason, what do you think about that, man? Are the tribes are they like coming to a reckoning now that the businesses they've built, that, like we've said before, our white glove services, we built these white glove businesses, is this like almost a new reckoning, wouldn't you say, Jason?
Yeah, I mean, I'll start off with, I don't know if I'm as sanguine as Todd regarding next year and the year after. One of the things, Todd, I wanted to ask you is if we've seen 40-50% reduction in purchases, and then I combine that with some of the other numbers that we know of, the loss in revenues, and then as Kristi's pointing out, tribes have enormous amount of debts that is, thankfully, maybe they were able to put it off through one of these federal programs and all that. My concern all along is, and I've talked only with Victor about it, is I haven't seen the corresponding numbers for layoffs and cutbacks that you would expect if all of a sudden your revenue drops off severely as it is. And I think a lot of tribes made the decision to keep people employed, and they did get federal help. But as we all know, that federal help is ended right now. I know they're still negotiating, and NIGA is in there fighting with everyone else trying to get more relief to tribal governments. But there's no solution right now. And I noticed that a lot of industries are really starting to announce major layoffs. And just today you're seeing in Bloomberg and other things, is there going to be a double dip, a recession within a recession? Because without that federal help, people are starting to just lay people off. And if you've got enormous amounts of debt hanging over and you got a debt-free period here, while they said no interest and no other things, and you could go to the Federal Reserve and maybe refinance. Where do you see this, Todd? How do you see us coming out of this, given that purchases are down and clearly revenues are down, even if customers are still coming in? How do you see us getting through this difficult second part here?
Yeah, sure. No, great points. Look, I mean, at the end of the day, there's a lot of volatility and a lot of different scenarios that could play out over the next 6 to 12 months. Our view is that we continue to reopen in the industry. Right now, we're at roughly 90% or just shy of 90% of the casinos in the U.S. market are open. I think the last big market is New York. And so we do look for that to continue. I mean, look, all this boils down to, COVID infections and death rates. I mean, if those trends continue to, I guess, moderate, and we as a country come up with better treatment and vaccine options, and that risk is taken off the table. Our view is that is the base case assumption, is that does happen at some point in 2021. But look, if it doesn't, then there's downside risk to those views, right? And depending on how quickly you get it, maybe it's there is some potential upside, right? I mean, if something were to happen later, towards the end of this year, there's some upside scenarios to that as well. Point being, there's still a lot of uncertainty, so that's kind of what we base our assumptions on, and we continue to track that on a monthly basis, and we have started to see in our numbers, we do a lot of surveys. We track game performance, and we are in those surveys and database products. We are starting to see a bit of a recovery, and so certainly that's kind of driving our view for the second half. I mean, obviously every casino and operator is different. Every market is different, but collectively, that is what we are seeing at this point.
Todd, it seems like everybody's leaning on the slot machines to generate this revenue. Everyone's coming back. Slot machines seem to be the game du jour again too. Does this leave any room on the floor for new products and stuff like that? Or are people just going to try to generate as much revenue as they can with these slots and stuff like that? Is this going to create opportunities for new products on the marketplace?
Yeah, I mean, I think it's interesting. One of the things we saw right away when casinos reopened, clearly customers migrated towards slots, and it kind of makes sense, right? With live tables, there's an inherent kind of disadvantage there in that COVID environment, and trying to socially distance there, where it's much easier to turn off every other slot machine or space those out. But we did see when customers did come back too, they gravitated to the kind of the old top performers, some of the slots that have been out there for years and years and years. So it was really interesting because we track it on a monthly basis, the kind of top performing slots, and we saw a reversion back to some of the old, the old timers, I don't know, Wheel of Fortune or Buffalo and those sorts of games.
Are we talking nostalgia? Are we talking nostalgia here?
Yeah, a little bit. That was interesting. I do think it probably delayed new product introductions, because you didn't need to have new products, right? I mean, just getting back in a casino after that market being closed for 2 to 3 months, everything's new again, right? And so it did kind of push out that a bit. But at a certain point, you're going to have new games, new cabinets, and so that will slowly start to come back, and we're starting to see that. In terms of new products outside of traditional slots, I mean, look, I think we kind of hit the key one is ETGs. I really think that's kind of the key right now for a variety of reasons. So I think you'll continue to see a lot of momentum in that area going forward.
I saw an article yesterday talking about IGT has got a traveling road show again, and it reminds me of like the early 2000s where they have a big trailer, and I think they had like 14 or 15 machines in there and stuff like that. So it kind of reminds me of those traveling video game arcades that you can hire for your kids' birthdays and stuff like that. So you can hire for your 60th birthday. IGT would show up with a bunch of slot machines. You just have your friends play out in the yard, right? So Kristi, what are you seeing now? Well, Kristi, what are you seeing? You touched about a very important issue to me, which is, and Jason and I have had this conversation a couple times, which is about, you know, tribes having to make the hard decisions of the finance. You know, a lot of tribes were very hesitant to lay off their employees. You know, there's you know, the history of the tribes. You know, we've all come up together. We're family. You know, Pechanga and San Manuel, we compete for the same market, but we're family. You know what I mean? And our employees, you know, you meet them, they've been there 15, 20 years and stuff like that. So, you know, this was really, I see a lot of tribes putting this decision off, and it seems to be a hard decision to make for a lot of tribes. Is this what you're seeing also?
Yeah, no, absolutely. I think it was an incredibly difficult decision, and probably more than not of those that we talk with kept employees on for a pretty long period of time. So paid them for, you know, well over the first month. And then after that had to make some tough decisions. Can't afford it anymore. I mean, if payroll is 30% of revenue, it's a big number. And you can't keep going into debt to finance that. I mean, it's not building, other than the strong loyalty and goodwill that your employees have for you as an operator and owner and community. That's very important, but it's not building an asset. So, you know, you're taking on 20, 30, 40, $50 million in debt to pay salaries for something that's intangible like that. That's not sure that's going to have a super long life going forward. And that
what does this mean? What does this mean down? What is this going to mean like 6 months down the road? Is it they're going to cost them more money to borrow, right?
Effectively, I mean, many tribes that made that decision found themselves from, you know, a very low leveraged position, relatively little debt compared to their cash flow, to you know, at the upper bounds of acceptable. If you, I mean, obviously for a couple of months, you could almost not even calculate things because there was a loss and it was just driving numbers down, and it was a dramatic change. So there were some creative calculations going on to figure out what these metrics really were, but it will limit flexibility going forward. So if a tribe, if more directly to answer your question, if a tribe had a project or they wanted to use some of the debt capacity of the casino for some diversification effort, they have less flexibility going forward, because in the case where they took on a bunch of debt in order to finance these expenses during the closure period, it limits their ability to go, you know, access that same line of credit or get new financing. That's probably the biggest thing. And then on the debt that they have, probably on the margin cost them a bit more.
Is it even possible to get financing right now for, I mean, is anyone even looking at additions right now and stuff like that, or is everything just in hold?
We're both. I mean, I think it depends on the tribe, the location, how the business has been post reopen, and kind of how aggressive they're looking for something. But we know there's quite a lot of projects that are being discussed with the kind of wider bank community right now. I think some of the new build properties are also being brought back to the investor community after, you know, there's some sense that it's probably not going to go to a widespread complete shutdown again in terms of gaming nationally. I mean, certainly, as you know, there's been isolated examples of properties that have opened and then had to close again, clean, fix the issue, and then open back up again. And I think that's on everybody's mind still as a risk going forward until there's some vaccine or, you know, instantaneous test or something like that to be able to make things a bit safer. So it's going to limit how much debt I think is available for any particular project, just because there's probably less risk that's willing to be stomached by the investor because of that level of uncertainty.
Well, I know there are a bunch of casinos across the United States that are still in the middle of construction. You have in Washington, you have San Manuel, and, you know, and then you have other ones that have just opened up. You know, Saquon opened up a year ago and stuff like that. So I know everyone's really concerned in making sure the market is still going to be there. You know, one of the concerns that Jason and I have are about the unemployment subsidies, and right now Congress is is still in the middle of an entanglement, and they're supposed to get $300 from the federals, and the state's supposed to kick in 100. How are these subsidies going to be affecting businesses in the next couple months? I think a lot of what we've been looking at the last 3 months, we've had these subsidies in place, the unemployment, and now when they're going to be gone, what does this mean for our businesses during the fall coming up?
I think the jury's out a little bit on that one, but some remarks that I've heard are that many of those that have received those checks aren't the core customers, and so maybe it wouldn't have as big of an impact as you might think. In other cases, people believe that operators that we've talked to believe that some of the pop that they received initially post reopen, people they'd never seen before, not in their database, and new trial that was likely coming from that set of people that were receiving these checks with nothing else to do, and so they went to go spend it. So I think the jury's out is probably a market by market kind of analysis for that demographic.
Todd, same question to you. What do you think?
Yeah, I mean, I think, I'm not an economist, but it certainly seemed like the unemployment plus ups and the stimulus checks certainly provided was a key component in the reopening in terms of, you had a lot of people who were unemployed, so nothing to do, right? But also had the same, if not more, income. And then you had the pent up demand. And so you kind of had a perfect storm on reopening, which led to some of those record numbers and really higher than anticipated revenue. I think it's a real risk going forward. It just doesn't seem like there's an appetite to have any sort of meaningful addition going forward in terms of stimulus. And so I think whatever ends up happening is probably going to be relatively modest. I think that is a real risk going forward for sure, and something we're definitely tracking, as we kind of work our way through the second half here, because look, I think that's a key driver for the industry.
Yeah, I think so too. And Jason and I have these discussions a couple of times a week about how the economy's going, and we always go back to that stimulus, and how important the CARES and all this stuff, and because of this election cycle, it's hard to tell what's real and what is electioneering sometimes. That's something I think a lot of us are very concerned about it. Todd, from your kind of let's go back into the business of gaming. How are the manufacturers handling this right now? How are they doing? Like I talked about, IGT is doing a road show. We haven't seen that in almost 20 years and stuff like that. It's interesting. I see Cy Gaines is getting some movement. What's another interesting thing in all this, Todd, kind of to sidetrack, has been really interesting watching the sports betting and how the bump in that. Do you have any insight into that in those businesses, Todd?
Yeah, I think when looking at it through the lens of the suppliers, or I guess just gaming in general, one of the key takeaways in our view was whether it was a jurisdiction, like a market jurisdiction, a state, or an operator or a supplier, those companies, jurisdictions that had something outside of the land-based gaming environment, whether it's like New Jersey, if you had online casino, right? Or whether it's a vendor and you could lean on your lottery business or your social casino business. Companies that had diversification outside of the land-based business obviously fared better than those that were 100% tied to the land-based retail environment. And so I think a lot, it makes sense. A lot of people kind of looked at that and said, hey, we suffered this time, but let's go ahead and make sure we're not in the same sort of position the next time something bad happens. And so I think you're going to see a continued push for the legalization of sports betting. Online casino, I think in many cases will come along with that. And look, I think for some of the other vendors, we've already got lottery approved in almost every jurisdiction, but the approval of online lottery or iLottery, I think will also gain traction. And so, I think that all these things, are positive for the industry from a diversification standpoint. You can also, touch your consumer or your customer in more places in more frequently, right, than just once or twice a month, right? And so there's a lot of cross-marketing opportunities. And so, I think that those are just some of the things that we've seen, and I think that you will continue to see going forward post-COVID.
Kristi,
It's yeah. Go ahead, Jason.
Kristi, one thing, right now, I think you would agree that money is key. I mean, if you need a loan or, the Federal Reserve has been very.
Lost your voice, Jason.
Oh, are you
There you
seeing the easy money at the Federal Reserve and some of these lending facilities? Is that translating down to the banks? And can people get these loans from the banks? Are you encouraging any of your clients to do that? Because money is very cheap right now. And to Todd's point, maybe you just take out a $10 million loan in anticipation of building a sports book or something, or implementing online gaming. What do you think?
Well, a couple things. I mean, one, on these federal programs, there hasn't been as much rapid take up by the bank of these programs as we'd have hoped. So like the Main Street lending program, as of a couple of weeks ago, there was only like one funded, one period loan funded. I think that's starting to gain a little bit of traction, but it has to, I think it sunsets at the end of the year.
Yes.
So, I mean, you got to move fast. And there were changes in order to make tribes eligible, but it just took some time, and, it was new legislation. So that we have not seen yet take up in any significant way. Yes, money is relatively inexpensive, but over the past couple of months, banks have been like completely unwilling to lend new money. So they've rolled over their existing funded commitments on a little bit tighter set of terms, maybe with a slightly higher price associated with it, but not really willing to put out more balance sheet to let a tribe go build something as an addition to their property. I think that's changing. I think we're starting to hear, given that it's now 3-ish months of operating performance, there'll be some new money that comes out the door here in the next quarter for sure. It's just, it won't be, like I said earlier, it won't be as plentiful. It won't be as much leverage that a tribe's allowed to take on, or quite as much risk that the bank or the investor's willing to take on that they did pre-COVID, until we kind of get through this next year.
Okay.
Wow. There's we have a question here. Let me get your question. 1 second. Thought this is to Todd and Kristi. Todd and Kristi, what do you think of the valuations relating to new investments in sports betting companies and customer acquisition costs? And will the actual performance of those companies receiving and handing out such large bonuses will ever justify investment valuations, or is this a great deal of hype? And, and kind of like in there, and what I want to talk about is, the whole thing with DraftKings stock, the way they're just running this thing up. I don't understand it. I don't pretend to understand it, but I do find it fascinating that, the optimism and the exuberance in someone like DraftKings relating to that. Is that kind of what they're talking about, isn't it, Todd?
Yeah, no, it's a good question. I think anytime you have a new emerging market, you tend to get a lot of excitement, both in the kind of news and press arena, but also just from, startup companies and new businesses and IPOs, and, investors tend to get really excited, and everyone kind of, does the analysis of how big that market could be, and kind of pencils out, all right, well, if we can just get, 5-10% of that, then, all the valuations kind of make sense. But sometimes it can, just that enthusiasm and excitement can kind of get a bit overdone at times. And so certainly there's a lot of that going on right now, I think, in the space. But look, I mean, it is a very big opportunity. There are going to be a lot of winners, not everyone's going to be a winner though. There are going to be some losers as well. It's a very exciting time, I think. It's a big change in the industry, and I'm frankly looking forward to kind of tracking how everything plays out, and which companies strategies work and which don't. And so that's what I'm really looking forward to doing over the next several years.
It's really fascinating to watch it from our perspective. We're looking at all this. Everyone's putting all this hype into it. It reminds me of trying to buy a purse over on Canal Street in New York, where all the bootleg, these people hyping you and stuff. You know what I mean? You're walking, hey, buy the stock. You're gonna get an incredible return and stuff. So it just feels a lot of that, like the internet hype of the late '90s and that. Although listen, DraftKings is a solid product, and our conversation a couple weeks ago with Chairman Newland from Bay Mills, that was a fascinating conversation. And I thought the move that they made in Michigan with Bay Mills was absolutely brilliant. So I think it's fascinating to watch, and especially from my perspective, it's like I don't really understand it, so I just stay out of it. But there's a lot I don't understand in this world too. So you know what, so what do you guys see in the next what can you tell our viewers about the next month? We have a presidential election coming. We have winter is coming, not to be too cliche, but winter is coming. So what are we looking at in between now and Christmas? Kristi, put your and I know that's a really difficult question, but I'm sure you've put a lot of thought into what's going on and stuff coming up.
Yeah, I mean, I think for us, more narrowly on the financing side, we're going to see more kind of renewed interest by investors and lenders into project activity. So I think people are generally coming out from under the rock that they've been scared and hiding under, and we're going to get some receptivity for some of these deals. So that's one thing that's a bit of a positive. I think on the tribal level, the discussion side, I think this has underscored the need for diversification and for investments that go outside of the gaming and kind of hospitality space, which tended to be the area that a lot of tribes focused on pre-COVID. You saw tribes interested in buying commercial assets, or believing that lodging was the right place to be, or certain chain restaurants were the right thing to do. I think there'll be a shift away from all of that, and thoughts on diversifying to a completely different space.
And Todd, what advice would you give the tribes over the next 6 months?
Good question. I think, look, I mean, on the reopening, I think a lot of it is kind of an opportunity to kind of refocus on your core operations, your key customers, right? I think we kind of talked about it earlier in the show here about kind of the industry, adding additional amenities, right? Hotels, nightclubs, spas, and all of those were, I think, good, correct moves. I mean, they are opportunities to expand the business, albeit I think in many cases probably lower margin than your core gaming business. And so I think what you're seeing, and probably what makes sense here, is through the remainder of the year is to refocus on that core casino, that core customer. Make sure they're happy. Make sure they're getting a value for their visit to your property. In a lot of cases, I think over the last 5-7 years, I think you have a lot of consumers that kind of feel like they're getting nickel and dimed on things and just not seeing the value that they used to. And so I think there's an opportunity to kind of return to that level of service and kind of build up stronger, kind of in that core business, and then ultimately down the road continue on with expansions and kind of diversifications of things like that. The other thing, outside of tribal gaming, but it's probably worth mentioning just for the industry, is anytime you have a major negative shock to the economy, you typically see a phase of gaming expansion occur in the subsequent years as states struggle with large budget deficits. And so, look, you're probably going to see the same thing here, maybe not this fall because it's still too early for that. But my guess is in 2021, you're going to see a lot of gaming expansion opportunities as states try to spur economic activity and generate additional tax revenue. That could be the legalization of sports betting, online casino. It could be VLTs in a route market. It could be new licenses for new casinos. It could be all across the board. So certainly, as tribal operators should be, aware of kind of what the risks are, I guess, from your neighboring commercial markets and things like that. But also, the ability to kind of push forward and try to participate in sports and online gaming, I think would be, good endeavors as well.
Yeah, Kristi, I want to go back to you, because I think that's a really good. What advice would you give the tribes over the next 6 months?
I think, on the expense side, being careful about getting back to the way that maybe their mode of operations was before. I think Todd touched on it, but the whole, customer reinvestment, if you will, comping and, providing a lot of incentives for people to come back quickly. They're not doing almost any of that right now. And so the margins are just crazy high. We're seeing, in some cases, 70+% cash flow margins, which is, phenomenal. Just being very careful about those things that will be an immediate hit to the bottom line if they don't directly relate to immediate also collection of revenue. That's a pretty slippery slope when some of those triggers start to be brought back into place. We saw it years ago in Atlantic City. And it just is a lesson, I think, from the past that just can be learned from, and make sure that there's a really careful reintroduction of some of those marketing elements that will very potentially quickly either erode cash flow margins or turn into some sort of marketing war if places are directly competitive with one another.
Right. Well, it's kind of time what both of you guys said. You're starting to see that in Las Vegas. They're really starting to push into California again. They're going back to their fundamentals again, which is California, no longer international. And you're starting to see that with in Las Vegas. There, you see it on Sunday. The big deal in the papers is how much traffic is going back to California and stuff, and they get so happy to see those traffic jams on Sunday night going back. But they still have a long way to go. And back to your point, Todd. I think Jason and I have this conversation all the time. The tribes need to be aware that there is going to be a push for expansion of gaming. And some tribes might look at that as encroachment, but everyone's going to be looking for the money for the bottom line. So Jason and I have this conversation several times a week. So Jason, what did we learn today, man?
Well, I just, Todd and Kristi, this is a little tougher question. Is there one specific thing that you think is irretrievably gone because of this pandemic? One specific business aspect at a tribal casino that is now, it's hard to envision it coming back. Is that, I don't know. I always worry about our slot demographics and then the effect that this COVID has had on the older population. But we've been predicting the slot demise for a decade now. What do you guys think? Is there one thing that you see that might not come back? Let's start with you, Todd.
Yeah, one thing that I've seen, I'll be curious to see what happens, is it looks like a lot of casinos are using this opportunity to kind of eliminate smoking from the floor. If I were to guess one thing, I'd say that. I think, maybe, the industry and as a whole probably goes to non-smoking.
That's a good one.
Wow. Yeah. Kristi, do you have the same question?
That's interesting. I think people have been saying it's hard to enforce a mask policy, for example, if you've got, smoking, but maybe the ultra high end and, the things that were built on the properties that were specifically trying to lure some of those ultra high end customers. And, obviously there's volatility with that type of play, and the cost associated with those types of running those types of amenities is staggering in some cases. So,
Are nightclubs gone? Are they going to bring back those nightclubs in Las Vegas and stuff like that?
I mean, my view is I don't know that. I think a lot of there's certain areas that I think are going to take longer to recover, right? Like, so a nightclub, sure. I mean, look, I think those come back, but it's going to be a longer recovery on that. And in some cases, some casinos might elect not to reopen those sorts of things, but I don't think they go away completely. There's always going to be a market for that. Just same as like buffets right now. That's kind of I think a lot of people would think that maybe that's not going to come back. But my guess is, there's a lot of smart people out there. They'll think of ways to kind of, address that. And I think it will come back. But again, it's going to be, longer than, some of the other kind of initial reopening activities.
Sorry.
Good.
Well, you know what? Thank you. This was a fascinating conversation. We covered a lot of bases, and I think, one of the things that we learned is that, this is not going to be easy. We've had a lot of challenges, and the last 6 months have been very challenging. But I think, what we have in front of us is, how do we run our businesses more efficiently? How do we make the right decisions? How do we get through this pandemic and make it to the other side? And I think, if we keep doing what we're doing, we keep our eye on the ball, and, it requires a different way of thinking again. But, Indian country is used to adapting, and I believe we will meet these challenges. And so, again, I want to thank my co-host, Jason Giles. Jason, another great job, my brother. Kristi, thank you so much. We appreciate you.
Yep.
And I really appreciate our conversations. I'm very fortunate I get to call Kristi up and talk to her and pick her brain. And so again, thank you, my friend. I really appreciate you helping me understand these difficult situations. And Todd, thank you for being a guest, your first time on our show. Congratulations on a phenomenal company, man. You guys over there, Adam and everyone, you've assembled one of the best teams in the industry. And
Victor,
yes, sir.
They were ahead of the curve. They don't have offices. They knew.
Well, listen, being antisocial, there are some advantages to that too.
Wasting all this money on buildings.
With Adam Krejcik, nobody likes the guy. You know what I mean? He's just nobody wants to be around him, and so that's why we asked Todd and not Adam too. So. Again, thank you guys so very much. And listen, next week we have a really great show. We have we're going to be talking about a continuation of these issues, except with restaurants and fine dinings and buffets and stuff like that too. So next week we have another great show. And again, thank you, Kristi. Thank you, Todd. Thank you, Jason. And Ashley and Mary Charlotte, thank you very much for putting on a great show. And to everyone that showed up, we appreciate you guys. And we'll see you next week. Thank you. Bye.
Thank you, guys.
Thanks, guys.
again.
Thank you for tuning in today.